Hey all, welcome to ShareTreck. Sorry for a slight delay in getting started today. Um, I was finding that with Explorer, I'm not able to show you my cursor. And for example, this arrow cursor that you might see here was not visible earlier in Microsoft Edge. So I was playing around with that, trying to see if somehow or the other I would be able to show you my cursor. But that didn't work out. So I set up Chrome, which works perfectly well, and that's what took me a little bit of time to get started. But now that we are here, and I still can't see the cursor, I think I'll reserve this challenge for a future date. I'll get started with what I want to talk to you about today. I think the only thing that's boosting the sentiment today is US lifting chip software curbs on China. And the anxiety is basically waiting for the economic data to come out for today. And let me just get into our economic calendar. Trading economics is where I go for the economic calendar. And as you can see here at 8:30 a.m., we have the non-farms payrolls coming out. And this is going to be able to move the markets. If the numbers come out bad, I think then that means the Fed will have to reduce the rates. So bad news is good news is what I'm thinking might happen with this market. However, today, as we look at the potential passage of the big, beautiful bill, I think that it becomes very interesting because it may end up cementing or creating an entrenchment into something that's been shaking the US economy for the past 6 months. President Donald Trump's second-term policies, from tariffs and deportations to sweeping federal spending cuts and government workforce layoffs, these actions have the potential to fundamentally reshape the economic landscape, both in US as well as globally. We may not see the full impact of these policies in the data right now, but we are already starting to feel the indirect effects. Just look at the latest job numbers. In June, US employers lost 33,000 jobs, marking the first negative month of private sector job growth in over 2 years. And economists were expecting a gain of 115,000 jobs. So this came as a surprise. I think we should not forget the Doge cuts when we look at the economy at large in this particular context. The question then becomes, what is driving this decline? According to ADP's chief economist, it's a combination of stalled hiring plans and a reluctance to replace departing workers. Though layoffs themselves remain rare, the result is a slowdown in job creation despite continued wage growth. Now, if I recollect, Amazon had said it had saved $350 million using AI for software upgrade. I don't know how many of that resulted in not hiring software developers. The category of people in yesterday's report who lost the areas where the jobs were lost were basically something that were susceptible to adoption of AI. Could AI be already displacing white-collared workers? That's the big question. Now, we'll see if this trend holds when the official jobs report comes out today, but early indicators suggest a cooling. It suggests a cooling of the labor market with expectations that the unemployment rate could tick up. Economists surveyed by Dow Jones expect to see growth of just 115,000. From January through April, you should remember that the number of job openings fell by around 5 to 4.5%. But beyond these numbers, there is something bigger going on. As Ron Hetrick from Lightcast points out, the weaknesses we are seeing isn't about a poor economy, it's about uncertainty. Companies are holding off on hiring and investments because they just don't know what is coming next, especially when the tariff uncertainty still looms large. This in turn could feed into even more economic vulnerability down the line. 9th of July is the line in the sand. And that's when this tariff drama is expected to end unless Trump decides to postpone it by another 90 days or 30 days. we still can't ignore the impacts of immigration policies, which are contributing to a shrinkage in workforce. Foreign-born workers have accounted for a significant portion of the labor force growth over the past few years. And with immigration restrictions tightening, it's only adding to labor market challenges. So if you look at it this way, what is the unemployment rate? Unemployment rate is number of people who are seeking jobs divided by the number of jobs available. So if the number of people seeking the jobs keep on diminishing because they are deported, then you would have a situation where, unemployment rate is not going up and still the economy is becoming weak and we don't get to know about it. So that's the concern. So where does this leave us? Well, it's hard to say for sure, but there are some key takeaways. The full effects of these policy changes may take months or even years to fully materialize. But the early warning signs are already here, with job growth stalling, the labor market more fragile, and a mix of headwinds like high interest rates and federal layoffs. The road ahead could get to look a little bit rockier. So that's the context in which I'm starting off the day, and I'm going to get into the single chart view and go for a one-day view on the stocks. We are looking at the S&P 500 index, and I think, hello Inf, thanks for joining. And yeah, so getting back into where we were with the markets, let's go and have a look at S&P 500, and we are already showing a gain out here of around 0.06%. As we approach 8:30 a.m., these numbers are likely to change, and we'll get a reading, and that could either let the market go down or go up. Pre-market sessions are all, basically retail investors, but the futures are pointing to a positive opening right now. Same case with NASDAQ as well. And I think if you look at both S&P 500 as well as NASDAQ, let me add some indicators out here. I would go in with my indicator out here, and also financial technical indicators, which are going to be exponential moving averages. And we are looking at MACD. My MACD indicator is not here. So let me add the MACD indicator, and also let me add the RSI indicator. Both are in here now, and I'm just recalibrating this because I'm using Chrome now in an effort to show you my cursor, but even in Chrome, OBS is not able to show the cursor. So that's been a problem for me. I'll fix it. But in the meantime, I would say that we still have the bearish divergences that we were seeing earlier. NASDAQ also has the same bearish divergence going on, and we are at very elevated levels. And if the job numbers do not come out well, I think it could tilt the market. Dollar index is going down, and as I pointed out earlier, if you look at how much dollar index has fallen from 13th of January onwards, you would see that right now we are down 12.08%. If you look at the reciprocal tariffs, which are going to click in automatically, you would see that to a certain extent, I think the exchange rate is trying to compensate for the tariffs. And as the dollar falls down, it becomes more expensive for US to import. So the main measure of the government to curb imports is going to work very well. But then on the flip side, the problem would be that imports are down, so supply is down, and demand staying static. It's going to lead to inflation. And that's the reason why the Federal Reserve is uncomfortable reducing interest rates. Because if the Federal Reserve goes ahead and reduces interest rates, then the dollar would go down further, and there'll be more dollars available in the hand of the people. So it's going to exacerbate the situation. That's the reason why this is happening. But let us see how the things unfold going forward. When you look at the 20-year yield, it has dropped a little bit, and the 30-year yield has also dropped a little bit. These movements do take place in anticipation that the Fed might cut interest rates. In my opinion, the yields are affected in two ways. One is that if the Fed issues new bonds at lower rates, then the older bonds which had higher rates will go up in value until the yields come to the same rate as the new bond issue. Now, this is true when the country that is issuing the bond is really sound and everybody wants those bonds, and there is 100% demand. But if the treasury has to resort to buying these bonds because of lack of demand, then that doesn't cut it. So in my opinion, even if the Fed reduces the rates in their new bonds, I don't think it's going to influence the bond yields, because if the treasury ends up buying it because others are not buying it, then that's going to still leave the yields high. So I think in the longer term, in the medium term, I think we are going to have higher yields because the bond might become out of favor, and already the dollar index is going out of favor. One of the benefits for the foreign investors is that as the dollar keeps on dropping, they get more dollars to take out when they take out the money from the United States. So that's one way of looking at it. But at the same time, as a foreign investor, when I'm looking at the dollar dropping and my own currency becoming stronger, I will hasten to take my money out of the US before I lose further value. So that's the dynamic I would like to look at. And I think the increasing dollar weakness is going to make US denominated instruments less attractive for foreigners. Of course, you can buy a whole lot of US investments for lesser foreign currency, but look at how it would happen when you're taking out if the fall continues. However, if you're of the opinion that this drop in the US dollar is temporary, then you will go hands over fist and buy US investments at this point of time. You'll buy US instruments with the hope that when you're going to take the money out a few years later, not only would the instruments have improved, but also the US dollar would have picked up value. Therefore, you get way more money on your way out. So it depends on who the foreign investors are and how they look at this whole situation. So that's how I think those dynamics might end up affecting overall. So with that said, I think I would like to move on directly into our various charts. Let's go on to the indicators first and see what we have out here. So we are at all-time highs out here with the S&P 500. Anything more that we break out here is going to be new bluefield growth out here. So it's always very risky. I think the markets are all very elevated, and any bad news can just turn us around. But at this point of time, with all the golden crosses out there, with all these exponential moving averages lined up to give support, bullish MACD, I think all of those factors are in favor of the markets going higher. The fact that RSI is overbought and also that we got bearish divergence are the negative factors. And the big beautiful bill, when passed, it's going to increase the deficit. That's likely to put a lot of pressure on the dollars, and therefore a falling dollar is again a negative catalyst in my opinion. So how all of these will shake out is something that we need to watch out for. But I am very cautious, likewise for NASDAQ as well. And VIX is going up 0.66% because whenever there is a whole lot of uncertainty, different parts of the market behave differently. And therefore, you see a whole lot of volatility. Sometimes something goes up and then it drops down like a stone. Gold is also down 0.34%. I think personally, I would like to get into gold as the dollar weakens. But the flip side of it is that if dollar starts getting stronger, dollar denominated gold becomes weaker. But if I'm a foreigner and my portfolio is not denominated in dollars, I would definitely go in for gold, because gold will give me more stability and preservation of value in this current environment. If I look at QQQ, it's up 0.17%, indicating that we are going to have a positive opening, and QQQ is not yet overbought, so it could go up a little bit more. So there's a lot of lack of synchronization between various indices, and they all need to get reconciled. Put call ratio continues to be neutral to mildly bullish at this point of time. And if I go in and have a look at AI sector, if you look at NVDA, it's still down 0.06%. Is NVIDIA going to pick up again today? Yesterday it was negative when we started, but then it pushed the market up with a gain of 2.58%. If that happens again today, then again we are back to the races and things are going to go up further. And if we look at where the resistance might be, I think I would like to draw a resistance out here. I would say that we may have a resistance at 158.89 for today for NVIDIA. And then if you look at Meta, it's up 0.70%, and it's at 718.54 in pre-market trades. The 9-day exponential has once again become a support for today. And then the 21-day exponential, which is sitting at 698.01, is going to be the next support that we may see today. That said, I think that the RSI has cooled off a lot, and the MACD is also bearish. So overall, Meta is showing weakness. They are putting a lot of money into employment, so the bottom line is going to be definitely impacted. Maybe that's what is being seen here. 3 continuous days of red candles is called as the 3 cross pattern. It's a bearish pattern. So we'll see whether we get the 4th day as well today. Now going on to Google. Google is up 0.10%. And it's kind of consolidating out here. If I consider this to be a bull flag, I think we are forming the flag for the bull flag. I'm still not too much worried about it. MACD is bullish. Momentum is also positive, above average, and there's plenty of room on the RSI. I think that Google could continue to move upwards today, barring any kind of negative catalyst. 830 could make a whole lot of difference, but right now, the way it seems, I think Google is looking pretty good. Amazon is up 0.22%. 9-day exponential continues to be a support for it. And if you look at Apple, it's down 0.48%. And 200-day exponential moving average, which is this white line out here, is the one which is going to be the resistance for today. And we have had some death crosses out here. So overall, Apple is not yet bullish as such. In the chart, it is consolidating, but overall, I think it's not yet bullish. MACD is bullish, and the momentum is also picking up in an effort to create golden crosses. So we have one golden cross here where the 9-day exponential has already crossed the 21-day exponential. And today, if we continue moving up, we may have the second golden cross with the 9-day crossing over the 50-day exponential. These are all the positives. So right now, the consolidation is good. And if we are able to break the 200-day exponential moving average today and convert it into a support, I think then Apple will be on a strong wicket. Microsoft is down 0.02%. It has dropped a little bit. And the 9-day exponential still continues to be a support at 490.25. Pre-market, we are at 490.97. And if we look at Tesla is up 0.53% in pre-market trades. The 50-day exponential continues to be a support, and the 9-day exponential sitting at 319.75 is a resistance. 50-day exponential is 316.03. So that's the range for today for Tesla. And Oracle continues to move up. They got this huge target project extension, an extra order of around $30 billion. So we saw a huge jump yesterday. And again, today, there is a gain of around 0.41% in pre-market trades. If I was holding Oracle, I would maybe sell some covered calls to protect on the downside a little bit, because the overall market is going to swing based on the economic data that we are going to see in a short while. AMD is up 0.35% in pre-market trades. 9-day exponential, which is sitting at 136.95, is going to be the major support at this point of time. And we can see that the RSI still has room to go up, and MACD is still bullish. And we look at SMCI, which is up 0.57%. 9-day exponential continues to be a support. Broadcom is down 0.01%, and that's not too much to worry about. 9-day exponential continues to be a support at 265.11, and we have Palantir, which is up 0.92% after falling for 3 or 4 days. We are seeing a little bit of gains this morning in the pre-market activity, and yesterday we had a gain of 1.10%. The question is this going to be sustained? So are we going to see a bear flag forming? For a bear flag to form, the price has to start going up. Right now, we are just seeing a consolidation out here. We'll watch the pattern as it emerges. But MACD is bearish and momentum is just at about average. So Palantir is not exactly galloping right now. SMH is up 0.27% in pre-market trades, 9-day exponential at 274.07 continues to be a support. Tempus AI is up 0.61% in pre-market trade. The 50-day exponential at 61.64 continues to be a resistance for this, continues to be a support for this stock. And and the MACD is absolutely bearish at this point of time. Momentum has also dropped significantly. So I'm not sure that this positive can hold on. But given the fact that there has been 4 continuous days of drops, I think there could be a little bit of consolidation here. Some of the bottom fishers could come in and stabilize the stock at this point of time. Now let's go on and have a look at Genomics and see what's happening out there. Genomics have been benefiting a great deal with all the positivities that are going on. Genomics has suffered a lot, and when the overall market goes for an extended ride, rotation comes into Genomics because it has been so beaten down that the people who have heavy profits on those tickers in the Mag 7, who have seen huge profits, they are able to take some of the profits, which they think even if they lose that money, it's not going to matter that much. And they put that into Genomics and also into areas where there is a lot of greenfield activity taking on. So as a speculative investment, and that's the reason I think we are seeing a lot of improvement in the genomic stocks, even though no new therapy has been approved so far. Mergers and acquisitions are also driving the sentiment and making it look positive. So at this point of time, you can see that Prime is up 12.45% as of yesterday, and pre-market it's up 3.58%. It's at 3.18, and the 200-day exponential becomes the support, and you are seeing a whole bunch of golden crosses. So Genomics is definitely coming up. Genomics stocks are also displaying high RSI activity. They are in the overbought area, and MACD is super bullish. So while there was a whole lot of pessimism just a while ago, we are suddenly seeing a whole lot of super optimism. So this is overreaction in my opinion, and so was the pessimism and overreaction, because better opportunities were elsewhere and money moved out of Genomics, and now it is coming back here as a risk activity, and it can move out in a dime. So be careful, in my opinion. That's my personal opinion, not financial advice. Intelia is up 0.93% in pre-market trades. Yesterday it was up 8.60%. Again, RSI is overbought here. Caribou Biosciences is flat in pre-market trades, and Beam Therapeutics is up 3.97 in pre-market after having gained 13.41% yesterday. And the 200-day exponential at 22.07 is the next resistance for this stock. And if you look at Altimmune, it's up 1.02%, regaining a whole lot of value that it had lost after the release of clinical trial data. And then the 9-day exponential, which is sitting at 5.10, is the resistance for today. And we have Verve, which is up 0.18% in pre-market trade, again forming a foundation or a base. With every passing date, the foundation gets stronger and stronger, and then on this base further growth can happen. Also remember, Lilly is backstopping a certain amount of Verve movement. And then if you look at Editas, it's up 1.17% in pre-market trades after gaining 13.78% yesterday. I think RSI is still got plenty of room before being overbought. MACD is also bullish, so Editas should gain further today before it starts consolidating. Illumina is up in a gentle trot. It's up another 2.23% as of yesterday, and a 0.18% gain in pre-market session. So anybody who had bought Illumina and is holding on to it is seeing a steady growth. I think this is very good. We are moving towards the gap fill areas. So I'm very happy about Illumina. CRISPR Therapeutics is up 1.03% after gaining 6.51% yesterday. Again, CRISPR Therapeutics is a magnet for profits that were made in Mag 7. And as you can see, the Mag 7s are not most of the Mag 7 are not close to their all-time highs. So profits taken from that is finding its way to riskier assets. And when it goes to riskier assets, CRISPR is among the best out there for investment. So all those monies are coming in here. As you can see, the sentiment is absolutely overbought. RSI is overbought. MACD is bullish. So everything is very stretched. And we have resistance out here. I think we'll find resistance at around 53.14. That's going to be the next resistance. Let me draw this out here. I'll put one resistance out here, and that's going to be 53.05. So watch out for that. And then we have Allogene, which has got no trades pre-market. Grail is up 0.02%. It had lost a lot of value yesterday. The 21-day exponential at 44.73 continues to be a support for today. And PACB is down 1.34%. Again, I think we have some golden crosses formed for PACB, so there is a mending going on out there. RSI is close to overbought. It's going to take a little time for PACB to gain because I think the balance sheet is looking a bit weak. RG is up 1.15%, and we can see that a lot of golden crosses have also formed. Again, on the mend, plenty of room on the RSI. MACD is bullish, so RG can move up a little bit more. Vertex is down 0.16% in pre-market trades, and it had some death crosses forming, and that death cross is got to reverse. So we'll wait and see what happens. The consolidation is good. Consolidation will help us to build a foundation and move up further. There is a lot of revenue earning products in Vertex, so I would not give up on Vertex yet. Ginkgo Bioworks is up 3.32%. Again, RSI is overbought, and we got MACD also very bullish. So profits are coming from other places. It's a rotation taking place, in my opinion. And with that, I think I have come to an end of what I wanted to talk about. I'm just going to go into currencies and look at Bitcoin, which is continuing to move upwards. And we had seen a kind of, I would draw a diagonal line of resistance connecting a bunch of highs. So we have got a support out here. The line of resistance has been converted into a support. And we want to see if today, when we close, if we close above this line of support, then we would have validated this support, and this can be a base, and we can jump up from here. We can launch up from here. And even if you look at this as a bull flag, I think we have good amount of consolidation. And if I was to look at this as a bull flag, then the breakout should give me a whole lot of jump. So I'm looking eagerly towards Bitcoin scaling new heights. And of course, in the past, we have seen Bitcoin's fortunes are tied up with the NASDAQ and the S&P 500. So if the indices do drop, the big question is Bitcoin going to drop? So we'll watch out for that. The other coin I'm very interested in is in XRP. You'll see there's a lot of momentum in XRP, and you have reverse head and shoulder pattern also out here. This is a daily chart. So I think XRP is another place where there could be some value. So with that said, I would like to look at our comment section and see if we have any user interaction. And if there are any questions, I could take that, or else I think I'm out for the day. I'll go have my breakfast and come back. So I'll give you a few seconds, and if you have something to say or ask, that would be fine. Otherwise, I'm gearing up for the day. Okay, guys. Bye for now.